Hi everyone, so my part today is about the question 1 in this project. Question 1 in this project is about the full consolidated financial statement of the Mercury Berhad and its subsidiary Venus Berhad and also Mars Berhad. So the first one I would like to share with you guys is about the goodwill in this question. So the first goodwill is about goodwill Venus Berhad. So the total paid up and the total issue and paid up ordinary share of the Venus Berhad is 2 million and Mercury Berhad only acquired 60% from the 2 million, which is amounted 1.2 million. So here, 1.2 million will be multiplied with the 3 ringgit each of the value of the one share issue. So next, we move to the goodwill of Mars Berhad. So the total issue and the paid up ordinary share of the Mars Berhad is 3 million. So the value of each share is 1.2 ringgit. So will be the consideration transfer for the Mars Berhad is 2.52 million. Now we move to the schedule to determine the amount to be transferred to the statement of financial position. So in this schedule, we start with the NCI that we take from the goodwill. So the NCI of the ordinary share capital of the Venus amounted to 2.24 million, and for the Mars is 1.38 million. And the next one is about the preference share capital of the Mars amounted to 600,000. The general result amounted to 3.76 million. For the group retail profit amounted to 90.618 million, and the last one is the 5.665 million will be transferred to the non-controlling interest. Another way to identify the amount to transfer to consolidated statement of financial position is by using consolidated statement of changes in equity. So the balance brought down for the changes in equity is 4 million, which is group general reserve, and 10.05 million of the group return profit. So acquisition for during the year, ordinary share capital of the Venus amounted to 2.24 million, Mars amounted to 1.38 million, and the last one is preference share capital of the Mars 600,000 will be entered in the NCI in this statement of changes in equity. Next one is the profit for the year. Profit for the year, the amount will be taken from the statement of profit or loss. So after that, I will explain to you how the amount of this profit for the year is identified. So the last one is the dividend of ordinary share capital amounted to 200,000 on group return profit, and for the NCI is 5,000 amount for the NCI, and the last one is the transfer from the general reserve to the ordinary share capital, which is 240,000. So the total amount of the changes in equity of Mercury Berhad is for the group general reserve is 3.76 million. For the group return profit amounted to 90.618 million, and the last one is NCI amounted to 5.665 million. This amount will be transferred to the statement of financial position, same with the schedule. So now, do you remember that I have mentioned to you about the profit for the year on the changes in equity? So here, this is the way how we want to identify the amount to put in the profit during the year in the changes in equity. So we need to do the working, which is profit attributable to NCI. So alright, now we move to the best part in this question, which is the consolidated statement of profit or loss. So the revenue in this statement of profit or loss is amounted to 123.65 million, and then cost of sales, which is amounted to 90.2 million, and the gross profit, which is the revenue deduct with the cost of sale, will get the amounted to 33.45 million. So here, from the adjustment that will be adjusted, will transfer to the statement of profit or loss, comprised of gain on disposal, preference dividend receivable, operating expenses, interest income, finance cost, impairment goodwill, impairment loss, amortization, and the last one is the bargain purchase. So, the gross profit will be deducted with the all expenses and the revenue that I have been listed before will be get the profit before taxation amounted to 80,588,000. So, with this amount, we will deduct with the tax expenses amounted to 6.85 million. And then, the profit after taxation will be amounted to 11.738 million. So, with the profit after tax, will be apportioned with the profit attributable to that we have been calculated before to identify the NCI of the profit attributable to. So the amount of the NCI of the profit attributable to amounted to 1.93 million that we have been calculated before. Then we transfer, we put here. So we minus with the 11.7338 million, and we will get the parent for the profit attributable to amounted to 9.808 million. Alright, now we have reached the very last part in this question, which is the consolidated statement of the financial position of the Mutual Berhad as at 31st December 2017. So here, from the adjustment, all adjustment that we have been adjust before, so the last destination for that amount will be entered in this consolidated statement of financial position. So the first one in the financial position is the non-current asset, which is intangible asset amounted to 3.2 million, and tangible asset we have a PPE, we have an investment in Venus, loan to Mars, and the last one is the goodwill. And for the current asset, we have inventory amounted to 11.8 million, bill receivable amounted to 10,000, and for the account receivable amounted to 10.525 million. The last one is in the current asset is a bank, 2.9 million. So with all of the amount, the total asset will be amounted to 61.063 million. Now it's about equity in the consolidated financial statement of financial position. So the amount of the equity we have take from the schedule or statement of changes in equity. So with that amount, we transfer to here under equity, which is for the ordinary share amounted to 12.52 million. But for the group general reserve amounted to 3.76 million. Group return profit 90.618 million. And last one for the equity is non-controlling interest amounted to 5.665 million. So here we move to the non-current liability, which is a 3% ready member preference share amounted to 1.5 million, and 7% of bank loan amounted to 2 million. And the last one in this financial position is current liability, which is we have a bills papers amounted to 10,000, ordinary dividend paper amounted to 405,000, and preferred dividend paper 120,000, and the last one is the account payable amounted to 50.465 million. So with the all amount, the total equity and liability will be 61.063 million, and the amount will balance with the amount of the assets. So that's all from me.
Now I'm moving on to question 2. For question A, the area covered in joint arrangement. First, the purpose, activity and duration of joint arrangement. Second, numbers of board of directors or equivalent governing body of the agreement are appointed. 3. The decision-making process. The matters requiring decision from the parties, the voting rights of parties, and the required level of support for those matters. 4. The capital or other contribution required of the parties. And the last one is how the parties share the assets, liability, revenue, expenses, and profit or loss relating to the joint arrangement. For question B, joint control is contractually agreed sharing of control of an agreement, which exists only when decisions about the relevant activities required the unanimous consent of the parties sharing control. For example, Abu has 50% of voting right in the agreement. Baba has 30% and Chombi has 20%. The contractual agreement between Abu, Baba and Chombi specified that at least 75% of voting rights are required to make decision about the relevant activity of the agreement. Even though Abu can block any decision, it does not control the agreement because it needs to the agreement of Baba. The term of the making decision about the relevant activity imply that Abu and Baba have joint control of the agreement. Because the decision about the relevant activity of the arrangement cannot be made without both agreeing. For question C, the accounting treatment relates to the rights to the asset and the obligation for the liabilities. For the joint operation, for the right to the asset, the party to the arrangement share all the interest in the asset relating to the arrangement in a specified proportion. For the obligation to liabilities, the parties to the arrangement share all liabilities obligation, costs and expenses in a specified proportion. The parties to the agreement are liable for claims raised by third parties. For joint venture, right to the asset brought into the arrangement or subsequently acquired by the joint arrangement are the arrangement's asset. The party has no interest in the asset of the arrangement. For obligation to liabilities, the joint arrangement is liable for the debt and obligation of the arrangement. The parties are liable to arrangement to the extent of their respective investment or their obligation to contribution any unpaid or additional capital or both. The creditors of the joint venture right to the assets brought into the arrangement or subsequently acquired by the joint arrangement are the arrangement's asset.
Okay, now let's move on to question 3. The relationship between Berry and Lily Berhad before the right issue and after the right issue. Before the right issue, Berry Berhad is a subsidiary company to Lily Berhad since the acquired share in Berry Berhad was 75%, qualifying Lily Berhad as its parent. After the right issue made on 1st May 2017, Lily still retained a control in Berry Berhad, but it showed a decrease in shareholding was 54%. So, Berry Berhad still maintained as a subsidiary company to Lily Berhad since Lily was not subscribed the right issue and initially sold the right issue to the other parties. For the next question, D, determine of goodwill. The consolidation transferred was 1.8 million. Add with NCI 25% times 1.6 million, we get 400,000. And the amount with 2.2 million will deduct with fair value of net asset at DOA amounted to 1.6 million, and the goodwill we get 600,000. Gain or loss arising from not retaining the same percentage of interest in Berry Berhad. We use the formula of retain control. Proceed received we get 160,000, less with fair value of investment at DOA amounted to 1.386 million. Next, we left to goodwill invest 600,000, and we get loss on the disposal 1.876 million. And the last question is question 4. Since Berry Berhad made a private placement, the number of issued shares was increased to 1.25 million. Berry Berhad became an associate company to Lily Berhad since the percentage of control was 48%, presuming that there is a significant influence. We can conclude that Lily Berhad was lost control in Berry Berhad, which means it has not become as a parent company to Berry Berhad. So, Lily Berhad should record the loss on disposal of 250,000 in consolidated statement of profit or loss.
Now, we move to the question 4. For question 4, Adam is an associate to Aisyah Berhad on 1st October 2017. Since the acquired share in Adam Berhad is 40%, the consideration transferred is 2,750,000 and return profit at the date is 200,000. This means the Adam Berhad is significant influence in Aisyah Berhad. Aisyah Berhad acquired 50% convertible debenture in Adam Berhad at FAR. Presuming if debentures are converted into ordinary shares, Aisyah Berhad would increase its interest in Adam Berhad by 25%. This would affect that Aisyah Berhad has intersect 65% in Adam Berhad. This means Adam Berhad is qualifying as subsidiary and Aisyah Berhad is parent until end of 31st December 2017. Then Aisyah Berhad would has control in Adam Berhad. Okay. Last, however, there is no change in the relationship between Aisyah Berhad and Adam Berhad because debentures are not converted to ordinary shares. Therefore, Adam Berhad will remain as associate to Aisyah Berhad as at 31st December 2017.
So I want to ask you the question. What do you understand about the equity method? Can you explain for me what is the equity method actually?
Okay, equity method is the investment as is an associate is initially recognized at cost and the carrying amount will increase or decrease by the investor shares of the post-acquisition profit or loss of the investee. The investor shares of the investee profit or loss is recognized in the investor profit or loss. So, the increase and decrease in carrying amount of the investment will also include in the investor shares of change to the investee other comprehensive income. Therefore, the carrying amount of investment in